YouTube, welcome back to another video with the House Money Investing channel. And today's video we'll go over quite a few stock picks and things of that nature. Now, as you can see here, I got 7 undervalued stocks that could soar in 2021. You're gonna have Coors, which is ticker TAP, American International Group, AIG, Duke Energy, VMware, VMW, Simon Property Group, SPG, and Biro Marine Pharmaceutical, BMRM. We'll start with TAP Course. It did pretty good last week. It was up, 2-3%. This company does pay a nice dividend, around 2.5%. Nice PE ratio, around 16, 17. $9 to $10 billion market cap. And this thing is about $16 off its all-time high, well, 52-week high. So still a nice little growth run-up, potential in this one. 19 analysts got this as a 42% hold, 37% buy rating. Blue Moon is one of the products they make. It's a leading craft brand, and consumers should be more receptive to the innovation within this trademark. Technology-enabled transformation of infrastructure and commercial functions should present low-hanging fruit from which to extract cost savings. If management is able to strike gold with meaningful innovation, it has the distribution to scale its offering more broadly and effectively than smaller competitors. They have been killing EPS since quarter 4 of 2019. They're doing fantastic. And this is a food and drink company out of Colorado. They make, adult beverages and stuff like that. Basically beer. It operates through the following segments of United States, Canada, Europe, international, and corporate. The United States segment consists of product marketing and sales of its brand and other owned and licensed brands in the United States. The Canadian segment includes production, marketing, and sales of its brands and other owned and licensed brands in Canada. The European segment comprises of production, marketing, and sales of its brands, as well as some regional brands in the United Kingdom, Republic of Ireland, and Central Europe. The international segment focuses its operations on Latin America, Europe, Asian Pacific, and Africa. The corporate segment represents interest and concern, other general and administrative costs that are not allocated to any of the other operating segments. It operates under the brands Blue Moon, Coors Banquet, Coors Light, Miller Genuine Draft, Miller Lite, a Canadian brand, Cobra, Doom, Bar, Henry's Hard. This company's been around since 1786, I believe. But yeah, basically it's a beer company. They have several brands of their own and licensed brands. Me personally, I do like Miller Lite. Not something I drink all the time, but if I have a beer, it's something I've drank and I will drink. Never had Coors Light. I've had Blue Moon before, I believe, at the bar before, and it was pretty decent. I'm not opposed to trying the other brands that they have, just haven't gotten around to it. Not a big drinker, just kind of a social drinker sometimes, which is rarely, maybe 4 times a year, if that. But yeah, I'm into Anheuser-Busch already, which makes like Budweiser, Busch, Bud Light, and all that. So Coors is going to be a nice swing trade with things opening up, the stimulus bill, and stuff like that, and people coming out of quarantine with the vaccines. I see the sales going back up. It was affected, by the pandemic. It kind of flatlined for a while and kind of crawled back up. It's kind of crawling back up now. Of course, people still drink a lot while they're at home in quarantine, especially the drinkers. But it's going to be a lot more social drinking coming down the pipeline and things of that nature. So I see them making a nice run up. Second stock we have that's undervalued is Enterprise Products, EPD. This is a stock I already own, fractional shares of. I'm not going to add it back to the watch list. Just a quick breakdown. They do have a nice dividend of 8-9%, PE ratio of 9 to 10, $43 billion market cap. They have a lot of potential to run up. I'm just not going to jump into this one at the moment because I already own it, and what I do have is already doing very well. 92% buy rating from 24 analysts. Its expansion into petrochemical activities, installators, enterprise and midstream cyclicality, enterprise marketing activities let it extract additional fees from its access base while providing insights into each of its markets. As the largest player in the NGL market, Enterprise is the most leveraged to forthcoming petrochemical demand pulling of NGLs into Gulf Coast. They haven't beaten their expected EPS, but the EPS is about, it's dropped quite a bit, since the early part of last year, due to the pandemic. And this is an energy company out of Texas, and I've swing traded this thing quite a bit back in July, in August, September, and October. So like I said, it is something that I already own. So I'm not going to jump back into it, but that doesn't mean you guys shouldn't take a look at it. It engages of the production and trade of natural gas and petrochemicals. It operates through the following segments: NGL pipeline services, crude oil pipelines, natural gas pipeline and services, petrochemical and refined production services. The NGL pipelines and service segments manage natural gas processing plants. The crude oil pipeline and services segment stores and markets crude oil productions. The natural gas pipeline services segment stores and transportations of natural gas. The petrochemical and refined production service segment offers fractional butane, octane enhancement, and refined products. This company was started in '98 back in Houston. So a nice little exposure to the energy section. Nice company out of Texas. Like I said, guys, take a look at it. Look at their balance sheets and stuff like that. See if it's something you want to get into. Third on my list, I have AIG, which is undervalued. Also, another stock I already own. This one here pays a nice dividend, which I'm already making. I've got a dividend being paid to me on the 28th of this month. Actually, I'm up 15.34% in this position. I am adding it back to the watch list. 3.43 dividend, $32 billion market cap. This thing has a run-up potential. It's about $18 off its 52-week high. 18 analysts, 50% hold, 50% buy. The aftermath of AIG's issues during the financial crisis occupied much of its management attention for quite some time. With these issues resolved, management can focus on the company's operations, and there could be amplified score for improvement. AIG has demonstrated process in improving underwriting margins in its P&C business. The current focus on risk-adjusted returns sets a proper course for the company, and it's just increasing profitability to the level of its peers, which would represent a material improvement. They got their EPS together, after a little bit after March, quarter 2 and 3, they had nice EPS. Quarter 1 was really bad, so they're starting to get it together. This is an insurance company out of New York. In my Robinhood account, I did purchase this thing back in October. I swing traded it in September in another brokerage and kind of transferred over here. And they basically engage in the provision of range of property, casualty insurance, life insurance, retirement products, and other financial services to commercial and individual customers. It operates through the following segments: general insurance, life and retirement, other operations, and legacy portfolio. The general insurance segment consists of insurance-based businesses in North America and international business areas. The life and retired segment includes individual retirement, group retirement, life insurance, and institutional markets. The other operation segments covers income and assets held by the company and other corporate subsidiaries. The legacy portfolio segment consists of runoff insurance lines and legacy investments. This company's been around a while, since 1919, based out of New York. So a nice little play for the insurance sector of the market. A lot of people probably, you heard of panic sales, so there's probably such a thing. It's called a panic buy. So a lot of people probably went out and got some insurance due to the pandemic. They'll probably continue to, and with people getting back to work, those who that don't have it, that can afford it, after they start back working, they'll probably get it. Just because this year kind of showed us you never know what's going to happen, so be prepared. So I see them making a nice little profit. Next on the list is going to be Duke Energy, DUK. Also another great stock. This one I own as well. I'm currently down in my position on Robinhood, down 5.08%, which is okay because I own it in a couple more brokerages, plus they pay a dividend yield. So the 5% I'm down is probably, much less with the dividend that they pay. It's 4.26%, $66 billion market cap, about $14 off its 52-week high as well. 18 analysts, 44% buy, 56% hold. Duke, regulated utility provider, a stable source of earnings. The company large capital expenditure plan should drive rate base and earnings growth for the next several years. The company operates in mostly constructive regulatory jurisdictions, which account for most of the company's revenue. Duke's management team has focused on core regulated operations and growth investments. Their EPS has been beating their expected EPS. They had a very nice third quarter. First and second were kind of stagnant. Third was amazing. So it's an energy company out of North Carolina. I bought this thing back in November. I just got some dividends on the 16th. Pretty nice dividends. Had them drip back into the company. So let me see. Comparing my dividends to my loss. Yeah, I made about 25% of my loss wages back up in dividends. Basically, this is another energy company. They do distribution of natural gas and energy related services. It operates to the following segments: electric utilities and infrastructure, gas utilities and infrastructure, commercial renewables. The electric utilities and infrastructure segment conducts operations primarily through the regulated public utilities of Duke Energy Carolinas, Duke Energy Process, Duke Energy Florida, Duke Energy Indiana, and Duke Energy Ohio. The gas utilities and infrastructure segment focuses on natural gas operations primarily through the regulated public utilities of Paramount and Duke Energy Ohio. The commercial renewable segments acquires, develops, builds, operates, and owns wind and solar renewable generation through the continental United States. This company's been around since 1904. So just another nice exposure to the energy segment. I'm adding this one right back to the watch list. I need to gain some more fractional shares and try to average down on my position of Robinhood. Next up, we have VMW, company I also already own. In my Robinhood brokerage, nice week last week, up almost 4%. This one I'm up 0.44%. PE ratio of 38, $60 billion market cap. It's about $21 off its yearly high, 52-week high. 29 analyst ratings, 72% buy rating. Product leadership in hyper coverage infrastructure in user computing, security, and software defined network provides remote growth opportunities. VMware's hybrid cloud program could yield tremendous growth if VMware is cemented as the dominant software supplier between private and public clouds. Its presence in the hyperscale public cloud networks can make it the de facto virtualization choice. Dell synergies could continue to benefit VMware through Dell's large Salesforce cross-selling to a wider swath of potential customers that VMware could reach. They've been beating EPS. Their actual last EPS, so last quarter, was pretty bad, but they're expected to kill EPS quarter 1, 2, and 3 of 2021. So, of course, I will be swing trading this. Pretty much based off the EPS, knowing that they're pretty much going to make some money. This is a California company. It's a software company. I did swing trade this back in October and made a profit. Actually made the purchases back in November. And basically, they're in the provision of cloud infrastructure and business mobility. Its productions include software-defined data center, hybrid cloud computing, and end-user computing. It supports modernized data centers, integrating public clouds, empowering digital workspaces, and transforming security. The company was founded in 1998. So just a nice software play. Cloud-based companies and security, cybersecurity, all that good stuff is really blowing up right now. And they're looking to dominate early next year. So definitely a swing trade I'm going to be into here. Then we got Simon Property Group, SPG, also another stock I already own. Going to add it back to the watch list. It does pay a dividend. I got an expected dividend landing January 22nd. I'm up pretty well in this position. I'm up 29.28%. I got in around $65.28. Nice dividend of over 8%. $28 million market cap. This thing's way off its high. You know, it's about $65 or so off its 52-week high. So a lot of growth for Simon Property Group. They have a 53% hold, 47% buy rating, 15 analyst ratings. If you don't know, Simon Property Group is a real estate company out of Indiana. And they have like a lot of malls and things like that, and retail stores and stuff like that. So I'm not going to get too deep into it. Basically, it's a real estate company that owns, you know, a lot of real estate for, you know, shopping centers, malls, outlets, things of that nature. And with stuff starting to open back up, they're definitely going to see some rent being paid. The next one we have here is BMRN. This is also another company that I own. Almost up 3% last week. I'm up pretty well in this one as well. I'm up 18.91%. Got in around $74. Currently at $88. Nice PE ratio of 20.30. $16 billion market cap. It's about $43 off its 52-week high. So a lot of growth potential. 26 analysts. 62% of them got as a buy rating. With the growing portfolio in attractive rare disease niche, a turn to a non-GAAP profitability in 2017, BioMarin could be an acquisition target for pharmaceutical firms with its pipelines to fill. BioMarin's approved drugs have been granted orphan drug status in the United States and Europe Union, providing them with at least 7 to 10 years of market exclusivity. BioMarin's drug target rare chronic conditions that often require treatment from a very young age, and while locating ineligible patients on a global level is challenging, the firm has high patient retention rates. They murdered EPS in the third quarter, so the fourth quarter should be pretty good as well. This is a pharmaceutical company based out of California. It's a biotech company. It engages in the development, commercialization of therapies for people with serious and life-threatening rare diseases and medical conditions. Its pipeline include BMN 111. This is a company that was started in 1997, so them dealing with life-threatening rare diseases and stuff like that. Definitely a valuable company to to everyone that may need it, even those who don't. If you care about the next person and things of that nature, you should want a company like this to do well and to have positive studies and positive results. So definitely something I'm going to jump back into. I'm already up big, around 19% on it, but I do want to build my position. So definitely something I'm gonna jump back into here. Then I got hold nickel stock only if you're prepared for an uphill battle, and I guess I'm prepared for an uphill battle because I do hold Nikola. I own Nikola in several different brokerages actually, and it's a company I got into, of course, during the hype craze. And I'm just gonna ride it out. They went. Trevor Milton destroyed the company, and then they had the bad GM deal. They just had a deal breakdown not too long ago, so it's looking very bad for Nikola. But I'm gonna stay in it. Why not? If it gets any worse, I might sell out. But I'm looking for a bounce back here. Maybe something can happen. It doesn't look like it, but I'm gonna stay in it and see what happens anyway. Then I have 3 stocks to buy with dividend yields more than 6%. It's going to be Health Investors, NHI, BCE, and good old HR Block. International Health Investors, I added to my watch list. Very attractive dividend, over 6%, $3 billion market cap. It's about $22 off its 52-week high. 8 analysts have it as a 75% hold, 25% buy. Looking at their EPS, they've been murdering it since 2019. Just great EPS. This is a real estate company out of Tennessee, so you're going to get those monthly dividends over 60%. It's a real estate investment trust which engages in the sell-leaseback, joint venture, mortgage, and financing of senior housing and medical investments. Its portfolio includes lease, mortgage, and other non-note investments in independent living facilities, assisted living facilities, entrance-free communities, senior living campuses, skilled nurse facilities, and specialty hospitals and medical office buildings. Founded in 1991, with older folks having to stay in senior housing and then assisting livings and stuff like that. These type of companies are always going to be around, and for this real estate firm to own those buildings and office buildings, plus buildings for nurses that are specialized with certain skills, I just see this company to continue that trend of the EPS that they've had. This thing was up nicely until the pandemic hit, of course, and it's just on its way back up. So it's about halfway there. So I'm gonna jump in and see if I can't, ride the wave up. Then we have BCE. This is a company they already have on the watch list. Nice dividend yield, $38 billion market cap. $7 off its weekly high, 52-week high. 16 analyst ratings. 44% buy, 44% hold. And this is a media telecom consumer retail services company out of Canada. EPS hasn't looked great. Quarter 2 it was down. Quarter 3 it kind of bounced back up. So we'll see where it goes from there. And they do like communication services to residential businesses and wholesale customers. It operates through the following segments: Bell Wireless, Bell Media, and Bell Wireline. I mentioned this company in another video not too long ago, so you can go back and check it out if you want a more in-depth view of this company. But probably the second largest telecom company in Canada, so we're looking to make some profit off this one, a swing trade. I haven't bought in yet, but I will be buying in soon. Lastly, we got H&R Block. If you're not familiar, H&R Block is a tax company. They do taxes. I used to personally let them do my taxes. They offer a bunch of different services like CPAs and stuff of that nature. They moved into some, kind of like e-commerce, I guess. They got live agents and things like that, certified people you can talk to. Not going to get into in depth in H&R Block, other than mentioning that it's a tax company. And H&R Block, I will not be adding to the watch list. Just not something I'm looking to get into at the moment. Maybe later on down the road. Maybe next year or so, if the company does a little bit better. But it's a decent company for the dividend yield it has. So I'm not saying, don't get into it. It just isn't for me at the moment. And then, of course, I just screenshotted the ones that I am adding to the watch list, which is Coors, AIG, VMW, BMRN, NHI. Then we got Crown Castle and American Tower. Tower REIT leaders, they're at a discount right now. And Crown Castle and American Tower are both REITs that I own, and they pay that monthly dividend. I got a dividend for Crown Castle, ticker CCI, coming up on the 31st of December. I'm currently down in the position, 7.78%. So I am going to swing trade Crown Castle again. That way I can try to average down on my position. Then AMT is American Tower. Something I've been swing trading for a while. I do own some in some other brokerages. I'm going to swing trade it as well and see if I can't build on the positions that I already have. And then I got one stock that's most likely to double in 2020, which is IIPR, Innovative Industrial Properties. It was up 2% last week. Dividend yield of 2.24%. PE ratio is around 60. $4 billion market cap. It's about $10 off its 52-week high. 7 analysts, 86% buy rating. They've been murdering EPS since quarter 4 of 2019. This is a real estate company out of Utah. It's a real estate and investment trust which engages in the acquisition, ownership, and management of industrial properties. It operates through the following geographical segments: Arizona, California, Colorado, Florida, Illinois, Maryland, Massachusetts, Michigan, Minnesota, Nevada, New York, North Dakota, Ohio, and Pennsylvania. The firm's property portfolio includes several different LLCs, and this company started back in 2016. So owning, if you want exposure to industrial properties, this is a nice way to go. Nice REIT, you're going to get that nice monthly dividend. These properties are going to continue to make money. So definitely something that's going to double in 2021. So of course I'm going to swing trade it. Then I just had a little question here: which is a better buy, Mid-American apartment communities or American homes for rent, which is MAA versus AMH? In my opinion, it would probably be typically MAA, but maybe American homes for rent is kind of beating them out at the moment. These are both real estate companies, both Reits, and two companies that I'm adding to the watch list to trade, just because this competition is going to keep these companies growing. You're going to get that monthly dividend. Reits are going to do very well coming out of this pandemic, so definitely about to swing trade both of these guys, which is there's Mid-America and there's American Homes for Rent. Then we have I just started a Twitter account with my house money investing. If you have Twitter, go follow me. I'd appreciate it. I'll hit you with a follow back. Then we had some news here. Trump signs the COVID relief bill and government funding, which isn't good for a lot of people. They only get that $600 check instead of the $2,000 check. I really not really too in depth about the stimulus bill. From what I've seen, it's a lot of waste of money. Then we have increased direct payment checks. They're going to vote. They're still trying to vote for the $2,000 check versus the $600 check. So hopefully that's passed, man. I mean, it'll help out a lot of people that don't have money. I mean, even $2,000, me being someone that used to be, broke or poor, whatever you want to call it. I guess they say poor is a mindset, but hey, I was poor. Used to be very broke, been homeless, all that stuff. So for those people, $2,000 isn't much. When you don't have any money, it seems like a lot, but it's not going to last you a long time. It's just not. You got to eat. If you got somewhere, you got to pay rent, you got to pay bills, you got to get to work, you got to put gas in the car, insurance, or have public transportation, whatever it is. Most people with low incomes are drug users. Not all of them, but most of them are. Whether it be cannabis to the pills, to the hard stuff. So they're going to have habits. Maybe they do alcohol or something. They're going to have habits to take care of. So that $2,000 would not last these people long. And it's just sad to see, man, that more foreign countries and illegal aliens get more assistance than the actual Americans, the people that they should be looking out for here in their own country. So I feel for those people. I've been in those positions, and it takes a little bit of self dedication and motivation to get yourself out of those situations, because there isn't very many people with helping hands, and definitely the country isn't set up for for you to have success when you're born around those levels. You kind of have to get it out the mud, I guess. So to those that are in that situation, hopefully they get themselves out the mud. I just wish that they can provide people with more stimulus. I know the unemployment was good, PPP loans was good. I personally know people that was on unemployment that was making more off of unemployment than they were from their regular jobs. So that was great for the American people. The first stimulus check of $1,200. I mean, I don't know what that did for people either. Hopefully the people that got it took it and flipped it, invested it in something. They bought something with it and sold it and made some money and started a chain reaction. That's the only really positive thing I can see that you could do with that money. But anyway, that'll end tonight's video. If you like the video, hit the like button, subscribe, hit the bell, follow my journey, all that good stuff. If you want to continue to see stock picks, stock gains, price movements, stock news, and things of that nature, I'm going to go ahead and make about 13 purchases. So I will be posting that video next. I'll buy 13 more stocks and we'll see what they are here shortly. Appreciate you guys for tuning in.